To remain updated with the latest business news, click on the bell icon.
Hello and welcome. You're tuned into Business Today. I'm Sakshi Batra. Well, the stock markets have been facing the heat from across the Ukraine-Russia crisis. We have seen the commodity prices spiral, and that's leading to a whole lot of volatility in the stock market. So in this case, what should you as investors adopt as the perfect strategy to navigate your investments so that they have the least impact of the current volatile environment? To help us understand all of this, I'm joined by a very special guest. Mr. Abhishek Basumallick joins in. He's the founder and Chief Equity Advisor at Intelsense Capital. Thank you so much, sir, for taking the time out. Now, let me kickstart by understanding from you. You have seen the markets long enough. Could you share some perspective from history on this war-torn environment and markets and how to really navigate through these times?
So two things, which is interesting in this particular case, last 20, 25, 30 years that we've actually seen a lot of wars. Started off with probably, Kuwait. We saw many conflicts, wars that has played out. And most of them have been very short drawn affairs. And their impact globally has also been relatively short.
Yeah.
The only difference is that, when it happens, you tend to get, because the news flow is such, from everywhere you're only getting, news about that particular event. It becomes very vivid in our consciousness. So
yes.
Everyone focuses only on that. And obviously, it's not that there are no impacts, right? There is always going to be an impact when there are large countries are at war. But the point is that even when, say, we had Kargil war in India, right? That was at home in India, and yet, it's become a distant memory. When you have the cushion of time, you tend to realize that these things sort of take care of itself over a period of time.
Right. But is it time to buy the fall that we've seen and we are time and again seeing in the stock markets, or is it time to just let the dust settle and come back when there is more clarity?
So, that's a more difficult question to answer. And the reason is that I don't think the markets, have fallen only because of this war. If you see, I think after the Paytm IPO, pretty much the markets have been moving downwards.
Yeah.
So it's last 3-4 months our markets have been going down, where there was nothing related to war or anything else, right? Very little of COVID happened. So it was falling on its own weight. You could say that post facto we could assign reasons for it, like FIIs have been selling and things like that. But the fact is that valuations were high, there was a lot of liquidity, and now the fear of that liquidity getting slowly taken out of the system is playing out. And that, I think, is more critical. Inflation rearing up its head is more critical than what is happening tactically, in the last 2 weeks or 3 weeks is probably lesser important. So
in this scenario, sir, where do you think for investors their money would be best placed? Is it in large caps, or can they still explore the mid and the small caps that have actually fallen 40-50% in certain cases?
Right. So first of all, I don't ascribe to this large, mid, small cap, theory, simply because, you will get great businesses which are small size. You will get great businesses at medium size or large size. And equally, you will get bad businesses which are large, and vice versa. So the point is, you have to look for businesses which are going to be able to handle a inflationary scenario well. Now that could be, so first thing that comes to mind is, where your demand is not impacted. Right. So you will not stop taking medicines if tomorrow the price of medicine goes up by 10%. You will not stop brushing your teeth because Colgate charges you 5 rupees extra on a toothpaste. True. Similarly, I mean, there are a lot of these kinds of sectors. I mean, FMCG is one of them.
Yeah.
But there are a lot of sectors where the possibility of pass-through of commodity prices
Hmm.
is slightly better than other sectors. So that's one. The
Understood.
other area is again completely commodity sectors where people are just trading commodities, right? So if price of a certain commodity goes up, the revenue goes up, and that's how it operates. So those are also
Yeah.
places where you can look at. So again, the
Okay.
idea is you have to look for good businesses in those spaces.
Absolutely. Would you also say advise investors against investing in at some point in time because of the kind of environment that we are seeing right now, or because of the rising inflation and the macro headwinds where there would be maximum impact? Is there any sector that you are advising against?
I usually don't take a sectoral call, but I mean, it's very difficult to do that. But if you find good businesses, then you can invest. There's nothing where
Hmm.
you should say that no, I will not invest in these kinds of these sectors.
Okay.
Uh,
And you really talked about like pharma and FMCG where there could be, slightly less impact. And, one should definitely look at these spaces and good
even
businesses in this
IT,
space
even IT.
and IT as well. What about banks? Now, they have seen some sharp corrections in the recent time. What would your order of preference be in the banking space per se now?
Banks, there are two views. So first view is that because inflation is going to go up, interest rates are going to go up, that
Yeah.
can lead to a certain amount of squeeze in terms of profitability in terms of banks and larger NPAs, etc., etc. The other view is that obviously once rates start increasing, you need more capital. So working capital requirements will go up, so banks will do well. So these are two divergent views. My personal take is when you are investing in banks, you should not be looking at month to month, quarter to quarter kind of thing. You should be looking at a
Okay.
much longer horizon. And
Okay.
if India has to do well, there is no way that a cash or a credit starved country like India can do well without a robust banking system and a robust
Correct.
credit growth. So good, well managed banks, you are getting it at a much more reasonable valuation, in my opinion. So well managed, good management qualities, uh, conservative banks are the place to be, in my opinion, for the next 3 to 5 years. I would put good banks at probably one of the topmost focus areas.
Absolutely. Should one also be in a rush to buy any of the reopening trades right now? Looking at the aviation space, now we have news coming in that full-fledged international operations will start soon. COVID largely behind us, so some theater stocks or so. Any of these spaces interest you at this point?
They could be short-term tactical plays, but
Okay.
both the sectors that you mentioned are operationally very difficult.
Hmm.
If to run as businesses to make them profitable. So these are not great businesses that you want to buy and hold for 3 years, 5 years, 10 years. You are much better off buying, probably in my opinion today, sectors which are more on towards real estate or where there is going to be infrastructure spending, right? So
Hmm.
uh, even engineering, capital goods, those could be better opportunities rather than looking at unlocked plays.
Absolutely. Now, for first time investors, I wanted to understand they are looking at this correction for the first time in their lives, those who have entered in the last 2 years after the pandemic crash. What would you really advise to them is the best way to keep their capital protected at the same time, be invested in pockets that in the long term can give them handsome returns?
First of all, I think I don't have any special specific advice for right now. It's always going to be the same. You should always be investing in good quality companies which are in alignment with your time horizon of investment. So if you are
Right.
looking at to be invested for 4 5 years, 10 years, then you should be thinking around those time frames. Or at least if you are planning to invest for the next 10 years, then don't look at the markets every day, right? I mean, then you look for investments where you can sit and hold for 2-3 years at least. So, that's one. Second is people who've joined the markets too. I think the longer term compounding is what really is going to make a difference to your, portfolio. So be disciplined, be systematic. Don't get carried away either by the upside or the downsides. So keep investing systematically, whether in mutual funds or directly into the companies in your portfolio. And sometimes the companies that you own are the companies which you should keep buying. I mean, you don't always have to look for new ideas.
Absolutely. Well, on that note, thank you so much, Mr. Basumallick, for sharing all these insights on the markets and how investors should really navigate these tough times. At the same time, which are the areas that they should focus on to get, maximum returns, even despite these kind of uncertainty that we are witnessing at this current point in time. Thank you so much for sharing your time.
Thank you.
If you like the video, do like, comment, share, and subscribe.